Have with us Deven Choksey, MD of KR Choksey Securities, joining us now from Mumbai to talk about what's happening with Reliance. Deven, we've seen a very big move coming in to Reliance, and it has broken out of nearly a 6-year zone of sorts. Now, what do you think has led to this kind of move? Do you think there is relief that it will finally start charging its customers, and the pricing now being offered is not really completely disruptive? Do you think that customers that it's managed to garner because of its promotional offer will stick? What kind of ARPUs does it translate to for Reliance Jio?
Well, I think good morning. We have many questions in one question, I suppose, but let me give some clarity on the subject. As I see it, I think today the market has understood the revenue visibility which the company has announced yesterday under the business plan or the revenue plan or the tariff plan, I think, which Mukesh Ambani talked about yesterday. I think if you translate this into numbers, assuming the 10 crore customers who have initially signed up and who are free customers, I think they are not converting themselves into paid customers for the time being. And I think the company ends up acquiring additional 10 crore customers in the next 6 months' time. I think who are basically in a billing cycle of more than 500 per month with other telecom operators. If those customers are acquired and if they are offered the plan which they have talked about, the 99 rupees price, 300 rupees per month fixed charges, unlimited data usages, I would think that it should translate somewhere around 35 to 40,000 crore worth of revenue for the company in a full year of working. And that should essentially result into 12 to 15,000 crore worth of EBITDA in a full year of working. Now, extrapolating these numbers further, I think in the first full year of working, which I believe would be 18-19, it would be somewhere around 60,000 plus crore worth of revenue for the company and 28,000 crore worth of EBITDA for the company based on these numbers alone, which we are talking about. It means that I think the half of the Reliance's profit size would come from Jio eventually in 18-19, which is just 1 year away from now. Given that kind of a situation, I think the market is definitely trying to price a future outlook on the business. At the same time, if you convert the Reliance Jio CapEx program into the EBITDA, EV to EBITDA valuation, you get, I think, a price of around 2 lakh crores, which could get added to market capitalization should they separate this company out and monetize it. And that case, 550 to 600 rupees per share kind of price can get added to the stock price at current level. So that's the reason for which market is sharing about this entire plan as of now.
Right. Deven, can you just reaffirm for us the EBITDA calculations for the first 2 years? Because, they have a massive capex for the infrastructure they laid for Jio as well. So if you can reaffirm for us the EBITDA and the bottom line performance you're expecting from Reliance Jio over the next 2 years.
The 45% EBITDA margin is given because it's the capex business. So capex part is almost getting over. Already 2 lakh crores has been spent. Another 40-50,000 crores might get further spent. So I think that the capex program is getting over. When this capex program is over, you can safely assume that I think the amount of money that they will be generating out of the infrastructure that they built itself, I think would achieve 45% plus kind of a EBITDA margin. And that gives you the number which I talked about.
Deven, after the recent up move that we've seen of 7%, what is the sort of upside you expect on this stock?
Pankaj, I think maybe short term, maybe anything, because current upside can also be attributed to short covering led buying which has happened in this counter because the stock has moved above the technical levels of 1120 in a hurry. So obviously, I think it has invited fresh level of short covering also. Now, having understood that part of it, I think in the near future, when the short covering activity subsides, I think the stock price might get stabilized. Now, in what range it should get stabilized? I would think that I think it should get stabilized between 1120 to 1250. That is what I think my take would be. And probably, I think going forward, you might see, I think over 9 to 12 months or 15 months time, I think 40%, 50% kind of an up move in the stock price, given the kind of strength of fundamentals which I talked about.
So your target price would be closer to around 1800 levels?
It is safe to assume that 1800 could be a good target price because 550 to 600 rupees would come out essentially from Jio valuation itself. And the core business of the company with an expanded capacity could easily command somewhere around 1200 rupees to 1250 rupees stock price.
Right. Assume that in the next 12 months things go as per plan and as per what has been told so far, and there is not a major erosion in the subscriber base. Do you think apart from only earnings upgrade, losses estimates coming down, there can also be a big PE expansion for Reliance? I was just looking at the PE estimates. It's trading right now even lower than Nifty on a one-year forward basis.
Absolutely. I think Reliance is being given a PE of a commodity company currently. Whereas if you actually carefully notice, I think the company is not a commodity company. Assuming that Jio could have its own fortune with a kind of I would say, demerger out of existing Reliance at some point of time. According to me, suppose if Jio had been demerged and probably they have gone into the hands of private equity owners, the valuation of Jio could have been far more bigger than I think the deal valuation which is getting reflected in the price today. So my strong sense is that at some point of time, Reliance will probably unlock the valuation, monetize this part of the valuation suitably. Either going with the PE investors who end up giving higher amount of valuations to the startups, or into the listed market where they can show the profit performance and probably get better valuations eventually. So in whichever way you look at it, Pankaj, yes, I think stock has remained neglected on the valuation. And I think the re-rating definitely is on card.
Right. And in terms of ownership, what has happened in Reliance since 2009, you think a lot of funds are not very overweight on Reliance, and that would be a key reason to get overweight because it's a big stock. It can absorb a lot of funds if any big fund wants to come and buy Reliance.
That's a big point actually, because I think global funds have been operating out of ETF clouds, and ETFs are not physically known for holding the stock for longer period of time. They are known for trading the stock for the alpha performance in the portfolio. So certainly, I think if they have not participated in the market and the domestics are restricted with the exposure size, I think that's the reason for which they have not seen the ownership building up in case of Reliance in recent time. But the way in which new funds are coming into the domestic portfolio, the 4,500 crore per month, and I think so they are coming and investing into equity. According to me, I think it's a matter of time that some of the neglected valuation stocks in the large cap basket could possibly invite a good attention of the promoters, the fund managers of many of the fund schemes. So, yes, safe to assume that I think there would be an increase in the ownership in this particular counter, which has been neglected for the last 7, 8, or 9 years now.
Right. If Reliance were to go 50% higher from here, Deven, what will be your Nifty target then? Last time around, it helped Nifty taking out its new high. I'm talking about 2007 when the split had actually happened. This time around also, you think that markets can go higher because of Reliance Industries only?
So great question, Pankaj. Again, I think if you notice, I think the amount of weight that it carries on the Nifty, assuming it is carrying 15% weight eventually on Sensex or Nifty, then I think you can possibly safely extrapolate these numbers and I think put the numbers about 10,000 Nifty easily.
Right. As far as Reliance is concerned, so it's on a space where capex will come down, earnings will increase. It's trading lower than Nifty valuation, and as well as it is a large cap stock which can absorb a lot of funds. So whether it declines or not, one should start to go overweight on this name.
I see the fundamental strength in the businesses. So I think the refining capacity of 100 million tons. Petrochemical and polymer capacity is expanded to 24 million tons plus, I think, 70% growth. They already have a sizable amount of the shale gas presence out there in USA, and it is a core business part of the activity. And along with that, I think with this expansion, they also now have the coal as defined as a feedstock, which could possibly bring down the cost of production for them. So ultimately, margin expansion takes place higher with the volume expansion. And on the other side, the consumer-facing businesses like retail and the Jio, both of these businesses hold a significant amount of potential of valuation unlocking, which has not happened up till now. So if this valuation unlocking takes place, which in all likelihood will, then in such situation, you are likely to see a larger amount of value buying taking place in these businesses. According to me, I think the key figure would be Jio as well as retail, which would ultimately face the consumer on the discretionary side. I think that could be the larger valuation provider compared to their core businesses. So I would not be very surprised if these two new businesses end up commanding a valuation far more in excess of 50% premium over the existing core businesses over a period of time. I would be surprised.
Right. What do you do with other telecom names then? So what happens to Idea and Bharti? Do you think that there is sufficient market for them also to grow?
Well, I don't doubt the market that they have created for themselves, and I don't think that the consumers will be very easy to get close to those companies. No, I don't think so. Maybe they will have to make an extraordinary effort in putting in higher amount of infrastructure and spend a lot of money on buying new airways, on buying infrastructure for the fiber, the tower, and make sure that the qualitative aspect of the technology is far more better than I think what Reliance has invested in. If they end up producing that kind of results, which probably is expected out of them as well, then I don't think that one should write them off completely. But at the same time, I must say that I think next 2 years, 3 years time for them is going to be an investment time, whereas Reliance has completed the investment program by and large. So obviously, you would find a larger amount of interest in Reliance counter vis-a-vis the interest in the other listed telco counters.
Right, sir. Thank you so much for taking out time for us. Always good to get a perspective from you. Deven has been tracking Reliance for really long. It has been on his buy list due to valuations, and today it's seen a relief rally. On that note, we're taking a break. Coming back in 2 minutes. Don't go anywhere. Lots more lined up on the other side.